All right, my beautiful friends, here we go, and welcome to my newest segment of markets. A lovely look ahead. Let's talk about this coming week. It's a big one. I want to put a couple of things into perspective. We're going to look at some charts together, and we're going to have all kinds of fun. Let's start off with this. All right, unless you live under a rock or on another planet, you understand that we have the midterm elections. They are here. Let's talk about what the market has priced in my opinion. The market believes at this point that the House is going to go Democratic. The Republicans will keep the Senate. I think the chances of the Republicans losing both the House and the Senate are almost zero. So, with that said, this is what the market is anticipating. Again, this is just my opinion. If it goes this way, stocks will not respond in a negative way at all. If the Republicans keep both the House and the Senate, stocks will respond in a positive way. So we have a three-way scenario here with regard to how the market is going to respond, in my opinion, with regard to the midterms here. Number one, what's priced in is, again, very simple. Democrats get the House, Republicans keep the Senate, stocks will respond positively. Why? It's priced in. Number two, Republicans keep both the House and the Senate. Stocks will respond positively. In the event that Republicans lose both the House and the Senate, stocks are not going to like that at all. And that's going to be a problem. But I think that's a long shot. And I'm not, again, I don't care. This whole political thing has gotten so blown out of proportions. To me, it's about making sense of how the market is going to respond. This is how we capitalize on all this. Period. You are not going to be fleeced under my watch. I promise you, it's just not going to happen. Speaking of that, let's talk about a few other things before we go look at some lovely charts. It's no secret yet again that the bond market is sending up a yellow flag here. The U.S. 10-year yield is 3.21. Okay, now there is no red lines in the sand. And I know what's going to happen. I'm going to look at social networks or people talking about me saying, Greg Mannarino says there's a line in the sand. Okay, there is no line in the sand. With that said, I believe if the 10-year yield continues to creep up, in other words, if bonds sell off here, and we start seeing 3.24, 3.25, 3.26, the market, the stock market, is not going to like that. We need to keep in mind that there exists, and it's huge, a compensatory mechanism between what the dollar is doing and what the bond market is doing. If yields continue to climb, but the dollar weakens, all right, if yields continue to climb to a certain degree, as long as the dollar stays either where it is or gets weaker, this is stock market positive. Okay? You have to watch these things, and this is why I have it set up for you on my lovely website. You know what? Let's make our way over to my lovely website. There is a link in the description of this video. I want you to click on that. You could pick up on this video right on my website. You know, let me just say this real quick. Please start watching my videos right on my website, because I can promise you there's going to be a time where I'm not out on YouTube anymore. I will be posting only to my website. So let's start utilizing my freaking lovely website. I will see you over on my website. Click on the link, traderschoice.net. if you happen to be on my lovely website. Well, let's continue with this Markets a Look Ahead segment. All right, I'm going to open up my own website. Here we go. Here we go. Nice, nice, nice. Couple of things here that maybe you are not aware of. I want you to pay attention to this right over here. Right over here. This is an amazing stock screener that I have put up for you. I want you to play with this real quick. Click on it, scroll up and down. Look how simple this is to use. It's insane. It tells you the ticker number, ticker symbol, and then you can see rating, sell, scroll down. You got a couple here that are saying buy. I mean, this could not be easier for you to use. It's just frankly stupid. And in my opinion, this is a stock picker's market. Don't try to trade an index here. You know, I did that for a very, very long time, but it's too volatile. Trying to, there's just craziness in this market. It's off the Richter scale. You all know that. All right, so utilize this stock screener. It is amazing in my opinion. It's already set up. You don't need to do anything with it. It's beautiful. Let's scroll all the way down, okay? Let's look at my lovely gauge here because I made some changes to this. I've now changed this to the ETF SPY, which tracks the S&P 500. You can actually trade this. You all know that, at least you should. Let's decipher this lovely gauge. This is a monthly gauge. Why did I change this to monthly? Because if you know, I am trading credit spreads. I mean, this is like really no secret to you. You can see all my lovely positions right down there. Okay, those are all my credit spreads right now. And as you can see, I am buying about a month out on a lot of these things. So that's why I chose to go by a monthly technical analysis here. So what do we have looking at this lovely gauge? 4 sell signals, 9 neutrals, 13 buys. Overall, we got, I would say, a mediocre buy signal. Monthly gauge. Now, what I want to do, go right above this technical gauge and look at my chart. I set this up for you again, ticker SPY. You can put anything you want in here. Let's look at SPY real quick. I tried to simplify this chart here using the Fisher 9. That's the indicator at the bottom, and you can see it really is good at picking reversals. Okay, that's why I'm choosing to stick with this. Let's look at the upper part of this chart now. Those 3 blue bands. Okay, look at those 3 blue bands. You can see once the price action is below that lower band, it's very bearish. If you look to the right here, we have moved above it. So we are now in the band segment. This is a good sign. This is somewhat bullish. We want to see the price action move above the top band or really close to it for a strong, strong bullish sign. We've got 3 candlesticks there. I mean, you know, we're going to have to see how this plays out this week, and you know, in my opinion, how this should play out with regard to the midterms, how it's priced into the market. I talked about what was or what is priced into the market, in my opinion. And I cannot stress enough to you how important it is to watch the bond market and the dollar. That's why right here, right next to this lovely chart, you can have the bond market. Look at that sell-off in the bond market. We do not want to see that. We want to see this turn around. Now look underneath that, and you've got the dollar bullish ETF. It's ticker UUP. We don't want to see that get stronger. Very, very simple. Let's look at a few other things. Now it says SPY on this gauge. I want you to put in QQQ. Enter. All right. This is the tech sector. Same kind of thing here. Look, it looks very much like SPY. I'm going to give this a neutral here. The market is still trying to find direction. Let's do a few more things. Let's put in ticker GLD. Enter. All right. This is paper gold. Now, as I've been outlining for you for weeks and weeks, we're bottoming out. Did turn out to be true. Making nice gains here. Now, look at how this looks to you with regard to the three bands, where the price action is in relationship to that. Look at the Fisher 9. Looks like it's about to roll over here, which is bullish. Let's look at SLV. SLV, enter. See how easy this stuff is to use? Same kind of thing, in my opinion. These are both looking pretty bullish to me. However, the paper derivative market has no real price discovery mechanism. It is not real. You all know that. Interesting stuff, if you ask me. So let's put this together a little bit, just real quick. Big week. Midterms are upon us. What's priced into the market is pretty simple. House going Democratic, Senate staying Republican. If this happens in this manner, markets will not be surprised or shocked. You would expect to see stocks move higher. If it goes completely the opposite way, everything goes Democratic, stocks will suffer. If everything goes Republican, stocks are going to go higher. Okay? Pretty simple, in my opinion. However, again, watch the freaking bond market. I can't tell you how important this is, people. It's actually more important than anything else at this time. Everything prices off of what's happened in this freaky bond market. You know that. So if we see, look, in my opinion, again, the potential for a sharp, hard sell-off in the bond market is very high. It's going to happen at one time, and I don't know when. There's no way to predict when this will happen. When this does happen, that's going to let us know that something very bad is unfolding. And I would put it in this perspective, it's going to be the big one. When all of this market, every aspect of it, corrects to fair value. So don't look at this freaking stock market for direction. That's how idiots understand the perspective of the market. It's like, for example, let's say you're watching some dude walking across the street, and you're looking at the dude walking across the street, and he's just having a lovely time. But we're not looking at the freight train that's about to hit him. You understand? You don't look at the dude crossing the street to find out what's going to happen. You want to look at something bigger, like a freight train coming at you. That's just why you got to look at the bond market. You understand? The imbeciles look solely at the stock market to try to figure out what it's going to do. You can't do that. You have to look at geopolitical issues, for which there are many in this environment. This trade thing with China, fake stories getting floated out there. I mean, you witnessing this right before your eyes on Friday. It was incredible. I even predicted it would happen a half an hour before it did. I said, watch, people. Watch for a story to be floated out there regarding trade. It's going to be positive. Half an hour later, like clockwork, it came out. And if you want to see the proof that I did this, go to my Twitter feed. And you can see all the timestamps. It's incredible. But we know what they're going to do. We know what they're going to do before they do it, because they think we're stupid, but we're not stupid. And that's really the truth here. Let me see here. Hey, if you want to check out some fun and lovely stuff, you're not even going to believe what I did. I don't even believe what I did. It's crazy. Look over here and click on fun and lovely stuff. Let me know what you think about that. All right, with that said, people, I love all of you. You know that. I'm going to keep you on top of this market to the best of my ability. I'm not always going to be right, but I believe I'm going to be right most of the time. If time has proven this to be true so far, we're not going to lose. You and me, it's not going to happen. We know exactly what we need to do for the long run. Bet against the debt. Become your own central bank. Trade this freaking fake market, because it's the gift that keeps on giving right now. And watch that bond market. We're going to talk in the morning. And I can promise you that is going to be even more lovely than now. If you can even believe that. See you tomorrow.